Hello and welcome to Weekend Wisdom. Today we're going to talk about taxation on Social Security. Yes, in fact, you do get taxed. Some people consider it a double tax. So sit back, grab your cup of coffee, let's get started. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So first, a couple weeks ago, had a conversation with a client, not happy that they were being taxed on their Social Security benefits. Well, of course, right? The government wants their piece. Now, your taxation depends on how much money or what you're making. So let's first take a look back and then give you some examples. 1983 came out, amendments to the Social Security Act, which at this time, 50% of your Social Security could be taxed. 1993 Deficit Reduction Act of 1993 went up to now 85%. So between 0 and 85% of your Social Security can be taxed. So how do you figure out taxation on Social Security? You need to use what the IRS calls combined income. This is a combination of AGI, adjusted gross income, plus tax-exempt investments. So that would be bonds and 50% of your Social Security benefit. Then you apply that to these tables, threshold tables, whether you're single or married and filing joint. We're going to go ahead and show some examples. Before we do that, don't forget to follow us on Facebook and Twitter. If you have any questions, information below to get in touch with us. All right, so a lot of information, maybe a little bit confused. I get confused on this. So let's walk through it. Combined income, just went through that. All right, so here's our chart here. Single, married, filing jointly. Taxable benefit, the percentage that's going to be taxed. Single, 0 to 25,000 in income, 0 to 32 married, 0% of Social Security will be taxed. Now remember, I'm talking about just Social Security, not your federal or state tax rate. Completely different, okay? 25 to 34, 32 to 44, married, 50% of your Social Security will be taxed. Above 34, above 44, 85% is now going to be taxed. So let's walk through a real life scenario. Two individuals, married, $28,020. Obviously, we have $48,000. So the first thing you do is you cut that by half. We've got 24. Let's bring in the pension and IRA. So very similar to a lot of clients. Income is $72,000, okay? So we've gone through the income, combined income, $72,000. I'm going to use a married couple only at this time. Taxable benefit, amount of taxable Social Security, okay? So the first thing is $32,000, right? 0. So that first 0 to 32,000, not taxable. The next 12,000, okay, which is 32 to 44, 50% of that's going to be taxed, $6,000. 28,000, which is the remaining balance, right? 72, 32, 12. 28,000 left over, above 44 is now 85%. So what is your taxable Social Security? 23,800 plus 6,000, 29,800 is the amount of your $48,000 in Social Security that will be taxed, okay? Kind of choppy, but let's go on one more slide here, okay? The next thing is, again, I'm not talking about federal tax. I'm talking about taxation on Social Security. The other thing, I'll bring this in, take a snapshot, Google it, state taxes on Social Security. Every state is different. I'm based in Delaware, worked at Tri-State, Pennsylvania, Maryland, okay? In those scenarios, non-taxable. Now, I have clients also in Chicago and California, North Carolina, they're covered, okay? Make sure what California, okay? So make sure you understand that as well, and then that will go through there. The other thing is, I'm a financial advisor, not an accountant. Understand it. This is part of our planning process. But either work with an accountant or get software, because when you get your tax return, and I'll bring it up on the screen here, you're going to have a Social Security worksheet. It all gets filled out, so all of this stuff I went through is going to be in there, and then it's going to give you that $29,000 amount we talked about, which is taxable. As always, this is why having a financial plan is so important. Click below, have a special deal for our Wealth and Wisdom viewers. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.